Bitcoin is once again flirting with new all-time highs, and it's not alone, as both the Nasdaq and the S&P 500 have both broken into new record territory, signaling continued strength across risk-on assets. But as we roll into a brand new quarter, will the market reset? We now have new range data and potentially new momentum across the board, and in today's video, we're going to break down what to expect from Bitcoin, equities, and the broader markets as we step into July and as Q3 begins. My name is Paul Sampson, and welcome back to DataDash, everyone. Before we jump into today's charts, if you want daily updates, real-time trade setups, and direct access to my analysis, make sure to check out the DataDash Traders Club, available through our website at DataDashPro.com. Inside the Discord, I share daily market updates, short-term and macros, trade setups, educational breakdowns, and much more. And whether you're a seasoned trader or just getting started, this is where I post everything I'm watching across crypto, equities, commodities, and beyond. And once you're over at DataDashPro.com, you have the choice of choosing between Nick's Dash Report, the Traders Club Discord, which is where I put everything from myself, or you can actually choose to bundle the two of them and you get the best of both worlds, essentially the full DataDash experience. Now, we've built a focused, no-noise community of traders who are serious about leveling up, and I'm there every single day sharing the same charts and commentary that I use to make my own decisions. So if you find value in these videos and you want to go deeper, please check out DataDashPro.com, join us in the Traders Club, as well as in Nick's Dash Report. We look forward to see you in there. All right, everybody, it's one of my favorite times of the year. It's when we get a fresh range for the quarter, and actually this is one of two favorite times because this is also the end of the first 6 months of this year. So we're going to actually have new 6-month range data, as well as some new pivots, which are those high time frame averages of price likely to be met in the following sessions. So in the next 3 to 6 months here, we're going to have a couple of key levels to kind of keep in mind. They're not guarantees by any means, but these are the areas where I do find that when I'm strategizing for that next big purchase, or if I'm looking to DCA or scale into the market, I'm waiting for Bitcoin to come down in these key regions. If they don't happen, they don't happen. Obviously, I'm already exposed to the market, but if I was looking for some fresh entries, this is how I would be approaching it. All right, folks, so at the time of recording this, we're sitting at about $108,000 Bitcoin, $10,000 higher than where we were just 1 week ago. Incredible, isn't it? We were trading right around this region here. We front ran the area I was looking at right at that moment, which was about 97,000. We came down to 98 and got the reversal there. And so the question now becomes, what are we going to be looking for here in the near future? Well, the overall thesis here is still remaining bullish to the upside, with 130 to 135,000 being the major target on Bitcoin in the coming months. All right. The question at hand is, are we going to see another pullback before that, right? And it's always something you have to be prepared for. You want to be strategizing around. You don't want to be scrambling when that does occur. And one of the things that I look to here, you'll see I have a couple of key levels here marked out as usual, just not too much on the chart, but just enough to kind of give us a good base. And I have 109,000, give or take. Here's 109,600 actually. And to me, that's actually the key for the break to new all-time highs, pretty much, right? So if we start to come up and live above that region, start closing hourly, 4 hours, dailies, it's not far off the all-time high at that point. I don't think it's too crazy to think. But I would say that more than most, that we're going to probably continue to head up towards 114, 120, and then beyond, right? So that's just where we are from this exact moment. Now, in the case of another pullback here, return to some of these averages of price, maybe a range rotation. These are things that I look to each and every week in the Traders Club, as well as each and every month, every day, quarter, 6 months, what have you. And if you recall, from the few times that we've had a couple of transitions like this over the last few months since I've been on the channel here at DataDash with Nick, we had a few different quarterly ranges that we have rotated, right? So as we came into the beginning of this year in 2025, right, this was our range that we were looking to. This was the previous quarter. We opened up our new year and our new quarter. So Q1 of this year, we opened up here. We put in a move to the high side of this right here, and then we essentially just rotated that range, meaning from a move from high to low or low to high. So in this case, we rotated from high to low in this case, eventually ended up rotating it right back, but I'll kind of continue the momentum here, right? So this is what I was anticipating in the first quarter of the year. All right. We also had a very nice entry trigger for shorts, or an alert to note that we were most likely going to see this move here. And it was the bearish harmonic, the shark that we saw up here at the highs right on Inauguration Day. We obviously had all the tariff woes and news that took us down into these regions here. Fresh reminder of quarter two, and now that we had quarter one's range data, all right, that we were looking at right here, we opened up the quarter down in this region. So we basically had deviated down below. I like to point out that this is the fair value at that time, essentially. And then that once we get back into that range, it's likely that two things you're going to see. You're going to run it up to the point of control, which is the highest traded area of volume on a given area, whether it's based on time or on structure. So in this case, I'm looking at it based on time. We also had a nice swing of the lows here. So we swept all the lows, got everybody really fearful, really bearish. We had negative news at extremes, just as we did right over here. You came up and you took the highs and then you ran that range. All right, over here, we took the lows over here and then we ran it right into this range. All right, and then at that point, we ran that previous quarter range, as we all have seen so far. And now we're just kind of trading in this region here. So what is the current range that we're looking at now as we have about to close a new quarter here basically today? And that is, if we just simply pull a fixed range volume profile from April 1st to today, this is going to give us our value area sitting here, which is the highlighted region. I'll go ahead and put a parallel channel around it so you get a nice clear view of the range that we're trading in. And this is essentially it, right? So of course, if we're going to break into new all-time highs, you clear 109. I think that that's really the key level as far as a initial like green light would go. Breaking the overall high is obviously going to be the key. But to get a little bit more confirmation at this level, I think 109 is really it. Otherwise, we still do run quite a bit of a decent risk of just putting in a lower high around these regions and then coming down once again into the low side of this range, which I think is likely over this quarter. All right, you'll see that I have a soon to be 3M pivot. So what that is the average of price that I've just worked up manually by hand. And that is the average of the last quarter. So this is from Q2 of this year. This is also the average, the exact same level is the average for the last 6 months. So since January 1 to now. And very likely we come down to this in the next 3 to 6 months. All right. So whether that's now, meaning that we just kind of see this move up, you come back down, you take the lows again, and we go, or at some point, if we push higher over the next few weeks, this is definitely a key area that I'd be aware of, that if we were ever going to see a flush at some point, quick, leverage liquidations, all that good stuff, that is the area I'd see a move to really fast. And a lot of times it's just a mean reversion, right? We see this time and time again. XRP had a really beautiful one on that rise up that we saw from basically 50 cents to $3. 179 was that same situation as we entered this year. It was a huge high time frame average, and we just had a quick wick right down to it right away. So no guarantee that we get it, of course, but this is the area that I'd be looking to, and I'd really box it off and add that into my region of 88,000 up to that night. So a $10,000 window. It's really a 10% box that I would say that Bitcoin is likely to come into in this quarter. All right, and that's where I'd look to pretty much scale into some altcoins that maybe I've missed, or if I've missed any of this rally on Bitcoin, that's where that's where I'm waiting for, I guess, right? That's the biggest piece of this. Do we get it? It's not a guarantee. But in the sense of building up your trading plan at this point, or at least for myself, that is how I would approach this, is that we now have new range data that indicates that we are likely to come back down towards the low end here. You'll note that the shark targets are still down here around this region. And then we have our pivot region down here as well. So that's our 3-month range that we're going to be walking into here basically tomorrow. And if I do one better here, we're going to take a look at actually the last 6 months now. So we have a 6-month range to be aware of as we're going into the second part of this year. And once again, I'm going to go ahead and highlight this region and just look at how perfectly this lines up with those shark targets. And anyone that's new to what I mean by shark targets, here's the fresh reminder. So when we actually took that low back in April here, I was targeting for what's known as a bearish shark yet again. This is a harmonic, which is a sequence of Fibonacci's, has direct ratios in price, has very specific targets, and one of which being the main one is the 0.5 Fibonacci. And at the moment, that does sit right here at our yearly open around this $93,000. All right. And the idea here for me was going to be, or still really does remain this, that we were going to see this rise up. I was targeting the high of this coming at the end of May utilizing fib time. Once again, all of this well documented in the Traders Club Discord, where you can get access to at DataDashPro.com. And really, so far, I don't have a reason to believe that we wouldn't see this outcome still, right? So it's still just Am I overly looking to short, exit the market, anything like that? No, not necessarily. I'm looking at this as a buy the dip opportunity, because the idea at hand is that we go from shark to what's known as a 5-0. No guarantee of that, of course. We'll have to gauge the market at that point. But now that even on top of the shark targets, our yearly open and the 6-month range low coming in at that area, this is just really big area of support if we come into it that could really set us up for the next leg higher up to that $135,000 mark. So that is what I am meaning when I say the shark target down here, right at the low. So over these next few months, maybe we push up into this region, as soon as this week, even around 109. If we catch a rejection on there, you slowly get this move down into the range low. It's not going to probably happen overnight. And then this region is really where I'm looking to see some big strength come out of Bitcoin, to get that next leg up into that $135,000 area, potentially by the end of this summer. Now, the S&P 500 has broken into new all-time highs here. And before we cover the chart, I just want to give a quick shout out to our channel partner, Efani, a mobile carrier that's built to protect you from SIM swap attacks and mobile hacking. And if you're in crypto or finance, securing your phone number is critical. Efani offers military-grade encryption, $5 million of insurance coverage, and top-tier support to keep your identity safe. And if you use code DataDash, you'll get $99 off of either the monthly or yearly subscription. So be sure to check out the link down in the description area below to learn more. All right, the S&P 500, once again, breaking into new all-time highs here. As we've really pushed into this multiple times, it's not necessarily always a huge run off the rip. As soon as we break into these all-time highs, a lot of times we've actually taken the highs, come back down for another small retracement, put in a higher low, and then continued higher after that. So similar to Bitcoin, as I'm walking in, or as we're walking into a new quarter and a new 6-month window, let's just take a look at the new range data. Let's take a look at where new pivots are going to be placed, meaning that the high time frame average of a certain time frame that's likely to be met in the following session. So when I'm looking at a 3-month pivot or a quarterly pivot, that's the average of last quarter, likely to be met this quarter, so on and so forth. Okay, let's just clear the high side targets out of the way. If we continue straight up from here, which I doubt we do 100%, but once again, we are in uncharted territories, and that is what we have to anticipate at this point. This is the box area I'm targeting next for the S&P, which is around this 7,500 to 7,700. Wouldn't overlook 7,000, of course, along the way. This is a more so long-term outlook, weeks, months, potentially another year before we get up into that region. That is approximately a 20% jump in the S&P 500. So that clears up the high side targets if we were just continue up from here. So let's take a look at the current quarterly range that does close off today, but it shouldn't shift too much at this point. And I'll go ahead and wrap a parallel channel around it so you can get just a nice clear look at it. So obviously we're trading at the highs, as this is still technically developing for today. So realistically, it could push up a little bit more, and we'll see how it ends up being. But we are going to have a new point of control for the quarter. So a quarterly NPOC, which is an untapped or a naked point of control. And once a range closes off, whether it's timed or structurally, it is likely to revisit that area, especially if we are trading within the range. So just something to keep in mind. Really would have to stair step it along with losing, once again, 2024's high and all that stuff, right? Not too much of a pullback here, pretty much to where we were trading at just a couple days back. I take it back, about a month ago, sorry. Now, the one that's going to have my attention is this right here, this 56.39, because as you can see, again, this is not technically ready yet. I worked this up by hand, and essentially this is going to be the average of price, give or take, for the last 6 months, so from January to June. So in July, for the next half of the year, it's going to be likely we come back down and revisit that region, all right? And that is approximately an 8 to 10% pullback. So it's in line potentially with Bitcoin, maybe pulling back to that shark target, things of those nature. This is also the 382 retracement. So when taking a Fibonacci retracement of this whole move up, that's been pretty much up only. I like to look for the 382, which is a 38.2% retracement area of that said, spot. So it's not 38% pullback by any means, but if I was to chop this section of the chart into 100%, this being this being technically 0 and this being 100% retracement, right? If we were coming all the way back down to 100%, this would be 38.2. This would be 60% right here. You got the 50 mark. You get the idea. And a lot of times, while we even will, have the gold pockets in mind, you only get a shallower retracement sometimes when you get these really strong moves up, and that 382 is really crucial. So the fact that it sits pretty much right on our high time frame untapped average, at least at the moment, as we come into the next 6 months here, that's a big area to be aware of, and then as well as the bottom area of the range. Now that was our quarterly range. As we look at the 6 month, as we just did with Bitcoin, you'll see also why my attention is focused on this $5,600 region as well, because at least if right now, if this was our high, say we kind of just push up a little bit more over the next day or so, come back in, you lose 2024's high. That's really going to be key. I'd say that that's pretty much the line in the sand at the moment for any downside here. I'd be looking for that point of control region. But overall, I would imagine we actually do run this range, rotate it to the low side. We'll see where the realistic 6 month and quarterly pivots do come in for the S&P 500. This would be still similar to Bitcoin, really nothing breaking at this point. We'd have a new high, potentially a higher low. I do anticipate more upside to come from here, but as risk at the moment would entail, not worth chasing the pump right here, right? So if you're looking for fresh entries or fresh ideas here, that is what I'd be looking for. This is what I'd set my alerts for, and that's how I'd be approaching it. Also, on the flip side, if you're not looking for fresh areas and you're just invested already, just be aware that we could pull back all the way down to this region, which once again is about an 8 to 10% drop, depending. And it's very healthy. It's very normal, very natural. And we really could see something along those lines easily and then still get that move up towards that $7,000, $7,500 target. And finally, our Nasdaq price action here. So we are in brand new all-time highs as well, similar to the S&P 500. We have a new quarterly range to just be aware of here. This is loose. I'm just throwing it around, but we have a point of control coming in back at around 21,300. The 0.382, so similar here, right? We've got a nice strong move up. If we were to get a pullback and just see a shallow, cool pullback here, this is where we tend to look for continuation. It does sit at about 20,200. You'll see this red line coming in right around that same area, and that's our quarterly VWAP. So we got a little support hanging out around that region there, and that's in line with maybe the SPX pulling back about 10%, right? That's a 10% drop there. I would say on this one, it's a little... I would give it a wider net that maybe we do actually pull back to the gold pocket region or the low side of this range. So just below 20,000. So maybe like a 10 to 15% pullback on here, right? So just something to more so be aware of. I still think that overall we head higher here. And then if we take a look at the 6 month range here, go ahead and just close off that with a parallel channel in line, right? It's not, I wouldn't really marry that exact area. If we were to get that pullback to 20,200, I would probably would say if we get a pullback, we're going to dip below 20, right? That's just the psychological number for one. Both ranges align lower than that. And I would imagine a lot of stop losses and things of that nature are going to be down below that. Psychologically, if you start breaking below 20,000, it's going to be, a little scary for everybody. But really, yeah, that 18.6 to 20,200, I would really say is the big landing zone if we were to get any type of pullback and cool down before that next leg up as well, assuming we get it, right? So, we are in new all-time high territory, so the trend is still up here. I'd say that the line in the sand on that is just coming back and losing that high around 20,002 or 22.2. And then, yeah, just really looking for that cool down there. I would imagine everything would line up at the same time, right? You'd get a cool down out of the S&P 500, Bitcoin, everything all together. Once again, if you'd like to stay ahead of the markets with real-time updates, trade setups, and deeper insights, be sure to check out our private Discord. You can access it through DataDashPro.com. And don't forget that protecting your digital identity is just as important as growing your portfolio. And that's why we've partnered with Efani, offering secure mobile protection with $99 off when you use the code DataDash. Links for both are down in the description below. Thank you all so much for tuning in. As always, I'll see you all in the next video. And until then, everybody, cheers.